Hi friends, welcome back to IC38 exam refresher modules. I am sure your preparation for the examination and for understanding of basic of insurance are on and it will lead you into a successful business in future. We have completed the first four chapters in life insurance segment of IC38 paper, and we are currently in the fifth chapter, application of life insurance. So what are all we are going to see in application of life insurance? Predominantly we will cover three different aspects of application of life insurance. Before that, we should also understand that life insurance is not only for protecting individuals against premature death, but it is also used for multiple other reasons, like creating a trust or creating a policy covering a key person of an organization or for redeeming mortgages. So we will touch base upon three different aspects of life insurance application. One will be Married Women Property Act. We will also understand Keyman insurance, and we will also understand mortgage redemption insurance. So Married Women Property Act. So what is Married Women's Property Act? This specific act takes care of protecting the interest of married women and the children, of course. So under section 6 of MWP Act 1874, it says the benefits under a life insurance policy to be passed on to wife and children only in a secured manner if the policy is taken under MWP Act. Moving forward, a better understanding of MWP Act. Wife and one of the children or more children jointly will be the beneficiary. Wife alone can be the beneficiary, or one or more children can be beneficiary under section 6 of MWP Act. When a married man takes a policy under an MWP Act, it is very clear that the benefits has to be passed on to the wife and children only. The proceeds of such a policy will not be controlled by any of his creditors or any other estate pattern, and it will only be, the benefits will only be passed on to the wife and children. To understand more about the features of MWP Act, let's see a few pointers. Each policy will remain like a separate trust, and a wife or children above the age of 18 will be the trustee. The policy shall be beyond the control of court attachments, creditors, and even the life assured. That means the benefits will pass only to wife and children under MWP Act. The claimed money shall be paid to the trustees. In this case, the trustees will be the wife and children. The policy cannot be surrendered, and neither nomination or assignment is allowed if the policy is taken under MWP Act. The policy holder has to appoint a trustee to ensure that the benefits of the policy under MWP Act is given to the trustees, right? So moving forward, benefits of MWP Act, a little more to add here. The trust is set up under a deed that cannot be revoked or amended. That means it is one-time act. The moment the policy is attached with an MWP Act, it cannot be revoked back. These benefits are secured from passing to future creditors. Any creditor cannot claim the benefits of this policy attached under MWP Act to be given to him or her. Rather, it will be going only to the trustee under the MWP Act, who are the wife and children, right? So administering the trust property and investing the insurance proceeds on behalf of the beneficiaries is the role of a trustee, and the policy holder has to appoint a trustee. So MWP Act is the different kind of a life insurance application benefiting the wife and children of a policy holder. So moving forward, let's understand more about Keyman insurance. Keyman insurance is benefiting the employees to take a policy on the employer or a keyman in the organization, so that in case there is a death of the keyman, the the loss against the death of the key man is faced by the employer using the compensation received through a key man insurance. Let me simplify it. There is a key man in the organization. The company takes a policy in the name of a key man. In case there is a death of the key man, instead of facing a loss, instead of facing the brunt of the death of the death of the key man, the benefits comes to the company for them to plan for the continuity of the organization. So key man insurance is taken by employers on the life of such key persons to ensure business continuity. Key man insurance does not indemnify the actual loss. Exactly speaking, we will not compensate the entire loss of the key man. Rather, a sum assured is attached to the policy and a fixed monetary is given as a benefit to the organization on death of the key man. Term plan is taken as a key man insurance policy, and a sum assured is linked to the term plan will cover the key man, and in case any uncertain death, the firm or the organization will be getting the fixed monetary benefit, which is the sum assured. The premium is paid by the company, and in case the key man dies, the benefit is paid back to the company by the insurer. Right. So who can be a key man? A big question here. Not every employee are allowed to be insured under a key man policy. The key man person should be justifying the role that his death would create a bigger financial strain to the business. For instance, a director of a firm, a partner of an organization, a key salesperson, key project manager are key man in the business. So what are the compensatable losses? So as far as the key man's role is concerned, we should identify to what extent the loss will be there, so that will be covered using a key man insurance. And if there is any death of a key man, this amount received by the organization will be used to recruit a new person or to bring in a person and train him and to sustain the loss and overcome the situation. Insurance is to protect the profits of the organization. So the key man insurance here will take care of offsetting the lost income from the lost sales if the key man is a key sales manager in the organization. Right. So we saw about MWP Act, we saw about key man insurance, and the last part of this chapter we will understand mortgage redemption insurance. So mortgage redemption, a person taking a loan against a property or to buy a property, this mortgage redemption insurance is taken along with the loan as part of the loan agreement, so that in case if something happens to the person who has taken the loan, this policy will compensate the outstanding loan to the banker. Right. So mortgage redemption insurance is popularly referred to as the credit life insurance policy. Right, friends, if you can recall, we spoke about credit life insurance policy when we were discussing various traditional life insurance products. Right. So mortgage redemption insurance, or referred as MRI, provides financial protection for home loan borrowers, and it can be called a loan protector policy as well. Right. So in certain cases, MRI, there is a decreasing term life insurance policy taken, wherein year after year, depending on the outstanding loan amount, the value of insurance keeps decreasing, and on death the outstanding loan amount will be settled by this mortgage redemption insurance. The insurance cover under the policy decreases, unlike a usual term plan where the sum assured is a level sum assured, and here there is a decreasing sum assured. The objective of the plan has to be understood, friends. Mortgage redemption is the objective, so that's the reason the life cover decreases year after year. So we come to an end of chapter 5. There is a video Q&A video available for this chapter. I would urge, after seeing this video, have a look at the Q&As as well. Refer to IC38 book to understand more about the application of life insurance, and keep continuing your learning exercise. Let's continue with the 6th chapter now to ensure that we are moving forward in this exercise of refreshing for IC38 examination. Happy learning, friends. Keep learning.